4 ways for Canadian families to pay less tax. Please do your own due diligence and consult a certified tax expert. This video is only intended for educational purposes. Now, the Government of Canada has proposed a package of tax cuts and increased benefits to make life hopefully more affordable for our Canadian families. Here's how families can put more money in their pockets this year. Number one, the family tax cut. The new family tax cut can essentially lower a family's overall tax bill by allowing a spouse to effectively transfer up to $50,000 of taxable income to a spouse in a lower tax bracket for federal tax purposes, providing tax relief up to a maximum of $2,000. This measure is ultimately aimed at couples with children that are under the age of 18, where one spouse is in a higher income tax bracket than the other. For example, if one spouse earns, say, $75,000 per year and the other earns $15,000 that year, the higher income earner could effectively transfer $30,000 to the lower income spouse for federal tax purposes. This would reduce the amount of tax the couple pays by bringing the higher income spouse into the lowest income tax bracket, resulting in the maximum savings of the $2,000 that I just mentioned. Now, couples can claim the family tax cut on their current tax year returns. To benefit, each spouse must file a tax return, and either spouse may claim the credit. So, number two, the universal childcare tax benefit as part of its family-friendly measures. The Government of Canada is also proposing to enhance the universal child care benefit. Parents with children under the age of 6 would essentially receive $160 per month at the time of this video, up from $100. Now, in addition, Canadian parents with children age 6 to 17 would receive $60 per month. Now, these changes effectively occurred on January 1st, 2015, and should be reflected in monthly payments to recipients beginning in July 2015. Of course, this is pending approval of the necessary legislation and red tape that needs to occur. Depending on when you've watched this video, you may simply have to follow up to see if this has actually come to pass or not. The July 2015 payments would include 6 months of benefits to cover the January to June 2015 period. Now, parents already receiving payments for children under the age of 6 years will automatically receive higher monthly benefits starting in July 2015. Now, the July 2015 payment will include up to 6 months of benefits to cover the January to June 2015 period, so there shouldn't be anything missed there. Parents eligible for the new benefit for children age 6 to 17 will begin receiving $60 per month for each eligible child starting in July 2015. The July 2015 payment will include 6 months of benefits to cover the January to June 2015 period. Again, just want to say it depends on when you're watching this video. This may have already occurred and come to pass. Otherwise, this is something that is still pending some barriers to it actually coming to fruition. Now, how do parents qualify? By completing the Canada Child Benefits application form. Parents who have already completed this form to access other child-related benefits do not have to resubmit the form unless their family situation has changed. So unless your family situation is different, there's no need, according to the instructions from the government, to resubmit the form. Number three, the childcare expense deduction, and this parents including childcare expenses to go to work or school can deduct childcare expenses from their income when filing their tax returns. Starting in the 2015 taxation year, the government has proposed that the maximum dollar amount that can be claimed each year increase by $1,000. The new maximum dollar limits would be the following: $8,000 per child under the age of 7, $5,000 per child age 7 to 16, and for infirm dependent children over age 16, $11,000 for children who are eligible for the disability tax credit. And the fourth and final means in which to save taxes this year for Canadian families is the Children's Fitness Tax Credit. If parents have kids enrolled in sports, they can now claim expenses up to $1,000 per year for each eligible child. That's double what they could have claimed prior to this. Parents can take advantage of the new $1,000 limit when they file their tax returns for the year. So once again, 4 things to consider in order for Canadian families to save money on their taxes. Number 1, the family tax cut. Number 2, the universal child care benefit. Number 3, the child care expense deduction. And number 4, the children's fitness tax credit. So please do your own due diligence and contact a local tax expert to confirm that you are indeed eligible for what you've seen and heard in this video. Thanks again for watching, and all the best.